All right, this is your breakout watch list from July 17th to the 21st. In this video, I'll be covering the top 10 swing trading setups from the long side going into next week. Each of these setups either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. And before we jump into the charts, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here's the list of the 10 stocks that we'll be covering in today's video. I'll also be going over entry tactics and where I'm planning to place my stop loss. So let's jump to MarketSmith and get started. The first stock is AEHR. It's a semiconductor stock that just had earnings last Friday, and even though their earnings per share was 0% growth year over year, sales were 10%, it's really the price reaction and the volume reaction that's important. And price was up 18% on, let's see here, 590% the average daily volume, very strong closing range. Also, when you compare to the indexes, QQQ, SPY, down at the end of the day on Friday. AEHR continued to close in the upper half of the daily range. That shows demand continued to come into this name. A couple different ways that I'm planning to trade this. If the indexes continue to pull back next week, Monday, Tuesday, Wednesday, if this pulls back as well, trying to get my position around this $45 area and get my stop loss under the low of the day. If we start off hot on Monday in the market, I'm just looking to play the HVC level, so the closing price, $48.96 as a potential entry, get a 2 to 3% stop loss, and really try to play the momentum on this name. Another area is just the high of the day, $49.80, or a nice round 50 number for AEHR. Next, we have a biotech stock, BHVN, and for full disclosure, I do have a position in this already, but I'm looking to add to it come next week. So this is an IPO that has already put in a nice base, rallied up through 20, all the way up to 25, First pullback to the 21 EMA, got supported, rallied back up. Second pullback, again supported. I entered this on, what would that have been, Tuesday? Tuesday, right around 23.30. And then the next day, when it pulled back into the 8-day EMA around 23.70, I added to that position. But once it rallied back into $25, I sold that addition. So I'm looking for another addition as we had a pullback Thursday, Friday, both very, very low volume pullback compared to the volume as it rallied up to 25. And this is one that once it takes out that 25 level on some extra volume, there's blue skies ahead. I want to be a little bit more patient with this name. So just breaking over Friday's high, 24.48, call it 24.50. Or if you want to be a little bit more patient, let it build out, and then when it breaks over 25, that's the time to press on the gas. This is a biotech stock, so you have to size it a little bit smaller. No sales, no earnings to talk about, so there is that additional level of risk. Next, we have CEG, and I think this is the most beautiful chart that I've seen over the weekend. It's in energy alternatives, which isn't a very strong group right now, 140 out of 197. But if we go to a weekly chart, you can see this is a stock that has the ability to run. It's already gone from $40 to $100. And on a weekly chart, you can still really see the cup and handle volume drying up in the handle, which is exactly what you want to see. You want to see less and less sellers as it pulls back. And during this big cup, plenty of volume there, pulled back into that 21 EMA, had a nice shakeout, went sideways, and then the volume started to dry up. We come up to the top of the cup, and then Thursday, Friday, both days, very light volume, just trading basically sideways, down 0.3%. This isn't one that's going to be up like 7% in one day, but it does trade nice and orderly. So it's kind of like one of the additional positions that I might put on, and I won't have to worry about it as much. I could use a 3%, 5% stop loss, and that should only trigger if the stock's actually breaking down and failing this breakout. But this is a beautiful chart, beautiful pattern that I'm looking at. So I'm going to use this as a supplementary position to the rest of my portfolio. And the opposite of a nice, smooth moving stock is Celsius, CELH. This is the energy drink company. This is one that has been leading for a long time. It's one of the leaders that I post on Twitter every single day. Even though it sometimes acts erratic, it is right near all-time highs, relative strength right up there as well. First time pulling back to the 21 EMA after a gap up, got supported immediately. Second time, a little bit less support, but we still closed above the 21 every single day. We did have a nice shakeout on, I think that's Tuesday of last week. Again, rallied back up over the 21 EMA. Tried to push into new highs, and we did get a closing new high on Friday, up 3%, while the market sold off later in the day and finished basically flat. That's showing some relative strength. And I do believe that this is relatively high, high short interest, 7.6 days, 24% there. So with Celsius, I'm just looking two different areas. If we just take out the highs at 155, that's one spot to look at. Or if we pull back into this 21 EMA, since we've been supported once or twice, then using a 3 or 4% stop loss there could work as well for Celsius. Next, we have a stock that I haven't heard many people talk about. This is EVLV. It is a relatively cheap stock, $6. Average trading volume, 1.7 million shares. If this isn't for you, it's not for you. Just, you could skip ahead in the video. But this is one that has a lot of power potential. Went from $2 to $6. From there, really only corrected, let's see, from 6 down to 5, 16%, less than 25%. So this does qualify for the high tight flag. We did undercut the 21 EMA, rallied back up, undercut it again, started getting some tight price action last week with 1, 2, 3 closes above both the 8 and the 21 EMAs, right around that $6 range. So this is one that I'll be looking for above Friday's high, 612, as a potential entry, and then adding to it as it takes out Thursday and Friday's high, 615, and see if we can get going there. It does have the AI theme to it, like many of the stocks that are working right now does. So this is more of a performance booster to your account because it's a smaller $6 stock, 1.7 million shares traded. You might not want to size this up as large as you would a Nvidia, Tesla, one of those liquid leader names, but could be a performance booster for you. So this is EVLV. Next, we have PSTG, Pure Storage. This is a computer data storage, 35th out of 197. So we have that A- group strength rating, 93 composite, 94 relative strength. Whenever stocks are liquid enough and also have composite ratings in the 90s along with relative strength ratings in the 90s, those are stocks that I put in a larger watch list. Doesn't mean they're actionable right away, but they're not stocks that I want to completely ignore. So going to a weekly chart on this, I just want to show we're above all the previous resistance areas. So blue skies ahead, which is always nice to see. We continue to ride that 8-day EMA up. And even though the market closed near the low of the day on Friday, this closed basically in the middle part of the daily range. If the market continues to pull back into next week, this might be a play for in a week or two as the 21 EMA catches up. But if the market can find its footing right away after maybe Monday, Tuesday pullback, just taking out the highs here, 38, call it 38.30 is the potential entry point. And then I just want to get my stop under the lows here at 37.38, round a 3.5% risk for PSTG. Next, we have a very high beta stock. This is RIVN. On a weekly chart, it's a little bit easier to see, but plenty of power. 1 week up 48%. The other week basically flat after rallying and then squatting on the week. But enormous volume out of this, out of the lows here in the base. We cleared the first area of potential resistance there. So this might be another one. If the market pulls back, it'd be fine to kind of pull back into the 8-day EMA. It hasn't tested that area yet. That's at 2350. That would be my first area to focus on market weakness is the 2350 area. But this is one that because of the overhead supply to the left-hand side, I want to play this on a powerful move to the upside with power in the market. So if the market's just breaking down, I want to avoid this name. But if the market can find its footing and get going right away, just taking out the previous highs here, 2654, I believe, was the high. 2689 is the potential entry point for RIVN. Got 3 more stocks for you. The next one is SOFI. This is another stock that is starting to move into its stage 2 uptrend. Going to a weekly chart, you can see really got damaged here, down from $26 to $4.25. But since then, we broke above the previous resistance at 840 and had confirmation to the upside last week. Not with overwhelming volume, but larger volume than the down days over the past, 10 days or so. We remain above the 8-day moving average, came down to test it on Thursday, kind of squatted on Friday. That's what the rest of the market did as well. No super clear entry point on this. It's just another name that has a lot of power potential and one that I want to keep on a watch list. One thing to watch is if the market really pulls back into this breakout point, 865 is an area to watch. And then you can play your stop loss under the 21 EMA at 833 or so for SOFI. Next is SRAD, and this is another stock moving into a stage 2 uptrend. There are so many stocks in the market right now that have finally finished basing out and are pushing out of that base on above average volume. SRAD is in leisure gaming and equipment, 73rd out of 197. DraftKings is a kind of the leader in that group, but this is a nice secondary name in Switzerland instead. Earnings estimates up 227% in 2023 for the rest of 2023, and then up 55% in 2024. This is one that's already kind of pushed through this $14 area, so I don't have a position in this. I didn't buy the breakout at 14, but with many of these stage 2 uptrend stocks is once they do break out, they first pull back into that breakout point. So I'm looking for a pullback into $14. You already have the 8-day EMA there. Maybe if this occurs over a couple days, you'll get the 21 EMA creeping up, but that might take a week or so. But this is one to put on your watch list. If we can pull into 14 and then find buying support in turn and do that U-turn from there, getting my stop just a 2 to 3% stop on this name because it does have that power coming out of the stage 1 base going into stage 2 uptrend, SRAD. And the last stock I have for you is VERA. This is another biotech, just like BHVN, so potentially you have to size them down a little bit because they have that overnight risk. But this is another one with a lot of power, from $6 up to $18. We pulled back, not even to the 21 EMA yet, but pulled back into 15, undercut it, low was 14.87 there. But you notice the volume's on the way up, the volume on the way down. That's the volume pattern that you want to see. And then you want to see tight price action and strong relative strength, and that's exactly what we got. We had relative strength the rest of the week as the indexes closed down on Friday. This was actually up 0.7%. Biotechs don't tend to trade in line with the market, which is kind of nice when the market, if you're expecting a market pullback, there still may be some biotech stocks to keep you interested in the market. But this is one I'm just looking for a break over Friday's high, 17.15, and then get the stop loss under the low of Wednesday, around 16.20 there for VERA. And that's going to be the breakout watch list. For the upcoming week. I hope you guys enjoyed the video. I'll see you guys next time.